Thank you for having me, Jody.
So the question today is, do I need an LLC if I already have business insurance?
Yeah, so I think a lot of people think that by just having insurance, that is alone enough to protect you, but that's not really the case. Business insurance covers specific risks, but it doesn't necessarily separate your business from your personal assets. And so without having something like an LLC or an S corporation or another business entity, you don't quite have the protection that you could if you had those things in place. The most important thing that you have to consider is, what if something happened in the business that might generate a lawsuit? If you get sued, then that opens up your business. And if you don't have a separate LLC, then it also opens up your personal assets. And so people can attach things that you might own personally. So sometimes it's not enough to just have business insurance to cover the specific risks that are out there, but you have to have that extra layer of protection from a corporate entity, such as an LLC or an S corporation or one of those other entities.
And just to follow up, what about tax benefits?
Yeah, and so by default, most businesses are structured to be either a sole proprietorship or a partnership, and also by default, the tax laws are not in your favor. And so having those entities in place, such as an LLC, which has some flexibility in the way that we can structure how you're taxed, gives us the opportunity as tax planners to change the game a little bit and slant the scales more in your favor. So there are things that we can do when you have a business entity to structure how you take money out of the business, for example, and that might have some tax advantages to you. So planning to get the proper entity and having that structure in place is important, not only from a protection standpoint, but certainly from a tax perspective as well.
Well, that makes sense. So do I need multiple LLCs for different rental properties, or can it all be
Yes.
one company?
Yeah, so when you have rental properties, it's a little bit of a different animal than just a business that operates. So rental properties, by their very nature, open up some additional challenges, if you will, from a lawsuit standpoint. Let's just say you're renting a property and somebody was hurt on the property or there was an accident. Again, you can have some exposure there if you don't have this entity in the proper structure. So we would tend to recommend having rental properties in an LLC, or you could group them into having multiple properties in one LLC. It really just depends on your situation. There's some checks and balances that need to be considered there. Having a separate LLC for each rental property might necessitate having a separate tax return for each rental property. So there could be some additional costs there from an annual perspective, having to file a separate tax return. If you want the maximum protection, there's a cost to it, and that might be what you want, but everybody's situation is different. So we have options when we advise clients on how to structure business entities when it comes to rental properties. You can do the single property in a single entity, or you can group like properties or similar properties and then have some layer of protection, maybe not the maximum layer of protection, but you have the ability to kind of structure it. And then you could layer in an overall management company that could add additional layer of protection and then help us, the management company, by having that in place, we may be able to take advantage of some additional tax savings with that structure. So really, it depends on your situation. There's no one size fits all for rental properties, but when you're having multiple properties or when you have multiple properties, you really should look at the entity structure and what your tolerance is for both the liability and the tax savings and the costs that are associated with that.
It's crazy. Like you said, it's not a one size fits all. I mean, and that's why people like you are so great, because we can come in and be like, oh, you have no idea. My situation is so different.
And that's funny. The case is, a lot of situations are very similar, but, they can be very different. So it's important that you have an accountant or a CPA that understands your situation, but also understands the different structures that are available and the different ways that you can set these entities up from a tax perspective so that you can have the best possible outcome. And again, it's different for each type of person, or each person that, has a situation. It can also vary by the types of properties that you have. So short-term rentals might be done differently than long-term rentals, and so on and so forth.